Let's continue to review the basic accounting terminologies. What is a journal entry? What is a journal entry? A journal entry is an entry to the journal. Then what is a journal? A journal is a chronological record of all economic events affecting a firm. So this is an example of a journal. And each of those is a journal entry. So as you can see here that what does a journal entry look like? A journal entry has a date, and those are which account and what amount. So, and here is a description. Those are the basic elements of a journal entry. What is a general ledger account? Or what is an account? What is a general ledger account? A general ledger account is a storage area used to keep track of increase and decrease in each of the financial statement elements. So this is what an account looks like. This is the name of the account. This is for cash account. And then, yeah, as you can see here that in a journal entry can touch upon several different accounts. For example, this journal entry with debit inventory, credit accounts payable. So those are two different accounts. And then here in each of the accounts, this is a specific area that we use to keep track of. So all of the journal entry which impact cash account gets to be recorded here. So this is basically, that is account which keep track of increase and decrease, which only relate to that account. So, and then what is a general ledger? That is a collection of a firm's general ledger account. So we have a collection of, for example, cash, account receivable, account payable, all of those are accounts. And then all of those together, the collection of all of those, that is called general ledger. And then in your previous accounting class, we have something called T account. T account is just, you won't see it in practice. That is just in the classroom for illustrational purpose. We use T account instead of general ledger account. So just we use it in the classroom for the convenience of illustration. We write it as cash. We have a beginning balance, and we have all of the increase in cash here. All of the decrease in cash at the right-hand side. And then we're going to have an ending balance. So this is called T account. It looks like a letter T. We use it to represent general ledger account in the classroom. So you're not going to see it when you go to practice unless you just want to illustrate something to your boss. What you are going to see in practice is probably something more look like this. What is Ch3 balance? So Ch3 balance is something which look like this. Basically, we have a collection of accounts, and at the end of each financial reporting period, we're going to have a balance for each of the account, and then we take those balance, we put them together on a list. So it is a report that lists the balance in each of the firm's general ledger account. It's just we take each account's balance and put it in a list together. For example, if the balance for cash is 32,800, then Yeah, we just take one number for each account. And then for a trial balance, we have two different kinds of account. One is called permanent account. The other is called temporary account. So basically, all of your balance sheet items, those are permanent accounts. And all of your income statement items, including dividend. Dividend is not an income statement item, but here the account dividend, that is also a temporary account. So those are temporary accounts. The reason the balance sheet accounts are called permanent versus income statement accounts are called temporary. The reason is for temporary accounts, at the end of each financial reporting period, we need to close it to retain earning. So it will be closed out to zero. And at the beginning of next financial reporting period, everything will start from zero again. So we're going to close it periodically to zero. Versus permanent account, it will be cumulative. So those accounts, numbers in those accounts, those are cumulative. So those are temporary and permanent accounts. What is post-closing trial balance? A post-closing trial balance look like this. So what is the difference between this one and the previous one? Yeah, as you can probably see that it is all of those are permanent accounts. And there's no temporary account here. Why? So what happened here? Where did all of the temporary accounts go? All of those temporary accounts here, they have been closed into retained earning. So they have been closed into retained earning, which is a permanent account. So there's no temporary account here. So post-closing trial balance, that is the trial balance after all of the closing entries are posted to general ledger account. And what are closing entries? We're going to talk about it shortly, but it's basically we close all of the temporary account into permanent account.